So let's talk about why government is supporting universities with large endowments. And this is just blew my mind when I started reading into this because, I've heard the things about Harvard and so forth. So let me check into this. I did not realize that 658 institutions have about $874 billion in endowment funds. Now keep in mind, that's nearly $1 trillion they have in these endowment funds. Where is this money?
I mean, where is it?
Where's
it going? I mean,
we're going to explain that, so be patient.
I mean, this also doesn't include the fact of the grants, and I didn't look into the grants. I don't think you looked into the grants either, but I know there's this big hoopla over Trump withholding $2.2 billion or something going to Harvard, and I'm like, wait, so they get a grant for $2.2 billion. They have this endowment that's huge. And then also in addition to that, these universities that are, again, receiving money via grants, some pay little or no income tax, and they also get a waiver on property taxes. I'm like, I think we're in the wrong business.
I think we need to open a university, a smart investing university, because what deals they get, and it's just amazing to me what they get, and the cost of tuition, which I know we're going to go over as well. But I just want to bring up the number on these. And if you don't know, Harvard's endowment fund is $53 billion. That's an Ivy League school. Yale, $41 billion endowment funds. We're going to show you where these come from here, but I mean, we could spend almost a whole show going over this, and we got to keep it somewhat short. But I mean, the tuition at Harvard is ridiculous as well.
I mean, tuition at Harvard's $57,000 per year. So you're thinking again, it's like, okay, well, essentially the way it should work in my mind is you should charge tuition, and then that tuition should be what the offset is to running the university.
Yeah.
But again, that doesn't appear the case. So I mean, a $57,000 tuition per year per student, I guess, doesn't go far enough at Harvard to cover everything. They need everything else. And I mean, maybe part of it is the administration of it. I mean, the president makes about $1.3 million a year. You compare that to San Diego State, here, a local university. My brother goes there. I have a lot of friends that went there. A lot of successful people I know went there as well. The salary of that president about $531,000, and the cost for 1 year of tuition is about $8,700. Is that kind of that from paying for Nash's tuition? Or is
no,
that,
I actually looked that up.
You did look it up. Okay.
Online. Yeah.
So I just look at this, and I'm sure the students at Harvard, they do receive a more prestigious education. I mean, that the famous people from like the Federal Reserve, and there are more. I'm going to say this is no knock on professors at SDSU. It's just a fact of like people that were on the Fed many times go back to teach at Harvard, or there's more prestigious people there, so you can't deny that. But the question is it 6.5 times better? And do students that graduate from Harvard make a salary that's 600% more than a graduate from San Diego State University? I think that's a hard-pressed question.
Yeah, it is a hard-pressed question. And also, too, I did look into, okay, where do these endowments distributions go from? I mean, where do they go when they got all this money? Where are they going from? So they fund about 48.1% fund student financial aid to help out with tuition. 17.7% goes to academic programs and research. And I'm not sure exactly. I know some universities do research. I'm not sure why. Shouldn't we leave that to the drug companies was my thought. Why are universities doing that? 10.8% is used for endowment faculty positions. And this is the one that I don't understand. Nearly 17% of the endowment funds are used for other purposes. Let me point out, that's almost a fifth of those endowment funds. They have no title for them. And I'm not sure where that money goes, but I mean, it's just, as you dig into this is, I don't want to use the word scam, but it's kind of like, who was that, the guy that got caught, not laundering money in New York. Not Jeffrey Bezos. No, what's his name?
Bernie Madoff?
Bernie Madoff, yes. That's what I'm saying. It's like, and he got,
Where's the money going?
Where's the money going? I don't get it. I mean, this is crazy.
Well, and I didn't have the numbers on it, and this is from ChatGPT. Harrison and I were actually looking at lunch the other day, and the number of administrators, based off what ChatGPT told me, so take that with what it is, but the number of administrators actually outweigh the number of undergraduate students at Harvard University.
Are you really?
That's what ChatGPT told me.
So you got to repeat that because I want to make sure people understand. So the number of administrators, and this is not faculty.
This is administrators
who do the office work.
Yeah, we'll call it.
They outnumber
the students, the undergraduate students.
There we go. We solved the problem. Fire half that staff because they can't be working that hard if there's more of them than there are students. That's crazy.
and I point this out obviously because we're an investment show, but it's just like, what? It's just so interesting. I mean, this is kind of party talk, you know, and it might get you in trouble, and maybe this gets in trouble with people a little bit, but I just don't understand it. You look at these numbers, it's like, what the heck?
Right.
But I mean, I'm going to pull this back in. We kind of went on this
We got
rampage. We're going to pull it back to the investment side here, because the other interesting thing about these is the investing philosophy. The goal is to earn around 8% per year for these endowments and pay out 4.5 to 5% to fund those various expenses. So they are using some of the money from the endowments to, again, fund those things as we discussed. This should then allow the endowment to continue growing, because obviously you're growing at 8, you're taking 4.5, 5. That should still leave some excess funds to grow. But a big problem is many have not been able to achieve that goal, with only 25% of 152 schools that were surveyed being able to meet the 8% return over the last 10 years. Over the last 10 years, stocks have done way more than 8% per year. It's like, what are you guys investing in? It makes no sense how these smart, intelligent people aren't even able to keep up with an 8% return. It blows my mind.
Yeah, and what are they investing in? Well, they can't cut expenses, because if there's a lack of grants, the grants or the government says, oh, we're not going to do this for you, so forth. The investments they're doing are not very liquid. Harvard, for example, 39% in private equity. So that means if you need the money tomorrow, like, oh, we need this because the government didn't give us this, well, sorry, you signed a contract. You can't get that until 2026. 32% in hedge funds, which also many times have contracts, can't cash out now, maybe next quarter, maybe only 10% of the fund or whatever it may be. 5% in real estate, which also is a non-liquid asset. 3% in real assets, that's probably like your gold, your silver, that one is probably okay. And just 3% in cash. Where's the stocks here? I don't see these stocks.
Well, I mean, I was just kind of adding that up. I mean, if you look at 39 plus 32 plus 5, I mean, that's going to be about, what is that? That's about 37 plus 39. I mean, it's close to 80% essentially in those assets. I mean, it's like, what? And again, this is maybe one reason that hasn't kept up with stock returns, because they're not investing in stocks. And it's like, why didn't you invest in stocks? And then the big problem is, as you said, it's like, okay, well, we lost funding from the federal government. As you said, it's like, okay, we have this $53 billion endowment. You can't even get maybe $2 billion out to pay for any shortfall because none of it's liquid. I mean, I can't believe this. I don't know. I'm very curious. How much do these managers make off of this as well?
I don't know. And we do our income account for clients. We do a 6% distribution rate, which has worked for well over 25 years. What are these guys doing? What are they getting paid? Where's the expenses? Again, I feel like there's a lot of one hand washing the other hand, because we've talked about where the money's going and then what the managers are doing. And we bring this up because I've always respected these guys. I mean, I thought, gee, these are the smartest guys in the room. I mean, they're from Harvard, they're from Yale, they're from Stanford. Wow. I don't know. Maybe there's something behind the scenes going on that, needs to be looked at.
I'm like, shoot, you could put, and this kind of gives a little bit away of how we do the income portfolio, and I'm not advocating you invest in the S&P 500, but shoot, you could have probably put like 90% in the S&P 500 and 10% in cash and be more liquid, and your returns would have been better. And even over a 20-year period now, I bet you, even if the S&P doesn't perform well over the next 10 years, which we don't think it will, I think that will still beat these
Jason, I got one better. They should have invested with Wilsey Asset Management. I mean, and our fee would have not been that high for that. For what do we charge for $1 billion? Oh wait, we don't have an account with $1 billion. Let's move on to the trade wars about hurting home prices, because I just want people to know. And again, we talk about too how the plumber is actually paying into the. I mean,
why is the plumber's taxes paying for Harvard's expenses?
Yeah.